Welcome back. If you're looking for that edge in the financial markets, maybe a way to quickly and really thoroughly understand where stocks might be headed, you're in the right place.
Indeed. Today we're digging into some fascinating new research.
Yeah, it's about using large language models, these, really smart AI language tools to help predict stock movements.
But with a twist.
Exactly. The big idea here, the really new thing we're looking at, is that the reach of news, how far it spreads, might be just as important as, well, the content itself when you're trying to predict market moves.
That's the core insight. Current methods, they often focus heavily on what the news says, the sentiment, maybe.
Right. Positive, negative.
Exactly. But they tend to miss a pretty crucial piece of the puzzle, how
Yeah.
widely that news is actually shared.
Yeah.
Dissemination.
Okay.
Plus, these models sometimes lack enough background context, the market data, and maybe the specific guidance needed to really connect that news to how the market reacts.
So even though these language models are getting incredibly good at understanding text, they might be missing the boat on how much buzz a story is getting. And that buzz could be key for stock impact.
Precisely. And that's where this new approach called FinGPT comes in.
FinGPT.
Yeah. So our mission today, really, is to explore how this new data-driven method tries to improve stock prediction.
How does it do that?
Well, by considering not just the news content, but also how broadly it's disseminated. And critically, by bringing in more market context and giving the language model very specific instructions.
And the potential payoff here sounds pretty significant. The research we're looking at suggests, what, an 8% improvement in prediction accuracy compared to existing methods?
That's the figure, yes.
Yeah.
An 8% potential uplift.
That's definitely the kind of advantage folks listening are interested in, I'd imagine.
Absolutely. And maybe to understand why that 8% is so compelling, but just quickly touch on why analyzing sentiment, figuring out if the feeling is positive, negative, neutral is so important in finance anyway.
Right, the basics.
Understanding a prevailing mood, the sentiment of news on social media, it helps you anticipate how investors might react. And, well, consequently, how stock prices could shift.
Makes total sense. A wave of positive stories often gets people interested in buying, right? Drives up demand. But you mentioned earlier that the older ways of doing this, even the first attempts with language models, they had their limits.
They did.
Yeah.
Traditional sentiment analysis, it often looked at, say, one news article at a time, in isolation.
Okay.
So it could tell you, this article sounds negative, but it struggled to connect that single feeling to the bigger market picture, or, crucially, to actually predict stock movements based on it.
Didn't scale up well.
Kind of. Then, we got more advanced language models like FinBird, Bloomberg GPT. They were much better at understanding the nuances, the jargon of financial language.
Big step up.
Definitely. But they often still analyze news somewhat separately, still focusing mostly on the content of each piece, without really systematically looking at how widely it was being reported.
So better at understanding the story's details, but still maybe missing how big a story it actually was in the market size.
You've got it. Tools like the market forecaster in FinRobot, they showed progress. They tried to get a broader sense of market sentiment.
Right.
But even those advancements often overlook this key factor, news dissemination. How far did the story travel?
Okay, so FinGPT is designed to tackle this head on. What's the core difference in its approach? What makes it novel?
The key difference really is that FinGPT looks beyond just the text. It brings in a few vital extra elements.
Like what?
Okay, first, it explicitly considers news dissemination breadth.
Breadth, how wide it spreads.
Exactly. The researchers grouped together news articles about a specific company, clustering them by topic. The underlying idea, or assumption really, is twofold.
Okay.
One, if a particular piece of news is being covered by lots of different sources, forming a large cluster, it likely signals a more significant market event, something with potentially bigger stock impact.
Makes sense. More noise usually means something's happening.
And two, they figured that a central representative article within such a widely reported cluster often holds the most complete information about that event.
That feels logical. A tiny mention somewhere probably doesn't pack the same punch as the same story plastered everywhere. What else does FinGPT factor in?
Second, FinGPT adds crucial contextual data.
Context. What kind?
Specifically, it feeds the language model daily stock price and return information for the company.
Ah, okay. So not just weekly changes, daily.
Daily. And this is really important. It allows the model to see how the market actually reacted to news events, often on the very same day or the next day. It gives it a much clearer picture of cause and effect, especially in the short term.
I see. So it's not just reading about some news from Tuesday in isolation. It's seeing, okay, here's the news, and here's what the stock price did on Tuesday and Wednesday. Connects the dots much faster.
Precisely. And the third crucial part is explicit instructions.
Guiding the AI.
Exactly. FinGPT gives the language model very specific guidance. It tells it to think about both the short-term and the long-term potential effects of the news it's analyzing.
Hmm. How does that help?
Well, it helps the model differentiate between, say, a quick knee-jerk market reaction and a trend that might have more lasting implications based on the news.
Okay, this definitely sounds like a much more holistic way of looking at things. News spread, daily prices, specific instructions. Let's maybe dig into the how. How does FinGPT actually handle all this data?
Right. So a key technique they employ is what they call high granularity, HG, for the stock price data.
High granularity, meaning,
It just refers to using that highly detailed daily data, daily closing prices, daily returns, instead of just looking at, say, weekly percentage changes.
gotcha, more data points.
Yes. This finer level of detail, this granularity, it shows the language model the explicit price movements day by day. As you said, it connects the dots much better.
And that helps distinguish short versus long term.
Exactly. It creates a much tighter link in time between when news breaks and when the price reacts, making it easier for the model to learn about those different time horizons.
So instead of just a weekly photo album, it's more like watching a daily video of the stock price. That extra detail does seem like it would be really helpful for an AI trying to learn patterns.
Absolutely. Now, building on this detailed daily data, they use news clustering, HGNC.
Okay, HGNC. High granularity plus news clustering. This is where the dissemination part really comes in.
Precisely. This is where they analyze how widely news is being shared. They start by collecting weekly financial news, typically headlines and summaries from sources like the FinHub API.
Standard stuff.
Then they use some clever techniques, specifically sentence transformers and BERT topic.
Okay, bit technical, but what do they do?
Essentially, these are methods that help the model understand the underlying meaning or topic of different news articles, even if they use slightly different words. And they automatically group similar articles together into clusters.
Ah, okay, so stories about the same event or topic get bundled together, like all the articles about a specific earnings announcement.
Exactly, or product launch, or a regulatory issue. Then, once they have these clusters, they need to figure out which ones are, well, good clusters.
How do they judge that?
They assess how closely related the articles are within each cluster. They use a measure called pairwise similarity. Basically, are the articles in this bucket really talking about the same core thing?
Makes sense. You want tight, focused groups.
Right. So for clusters where the articles are very similar, they use a threshold, similarity greater than 0.6, they pick one representative article. Think of it as the best summary of that news event.
And what else do they note?
They also record the size of that cluster, how many articles were in it, and the time period it covered. The idea being that these large, tightly grouped clusters represent significant, focused news events.
Okay. And what about the news stories that are maybe related but not super tightly, the less cohesive clusters?
Good question. For those less cohesive clusters where similarity was lower, 0.6 or less, they still pick a representative article. But they sort of cap the importance given to the size of that topic cluster. They still note the time range, though.
Why cap the size importance?
The thinking might be that if the news is less focused, maybe the sheer volume is less indicative of a single major event driving the market. It's a bit more nuanced.
I see.
And finally, they have a strategy for selecting a mix of these high cohesion and lower cohesion clusters each week. This ensures the language model gets enough information to work with, capturing both the big clear stories and some of the peripheral chatter.
So they're trying to balance capturing those major, widely echoed stories while also not completely ignoring the broader news landscape.
Okay, that makes sense. Now, how does all this information, the daily prices, the representative articles, the cluster sizes, get used to actually guide the LLM's predictions? This is where the prompt engineering, the instructions come back in.
Exactly. The instructions given to the LLM are carefully tailored based on the type of data it's receiving.
Okay, so with the HG method, remember that's just using the high granularity daily stock data without the news clusters yet.
Right.
The model is explicitly told to distinguish between the short-term and long-term effects of the news it's reading. Because it has those daily price movements right there, it can see the immediate market reaction, which helps it figure out that short-term influence.
That makes sense. The daily data gives it the clues for immediate impact. So how do the instructions change when they add the news clustering? For the HGNC method.
Right. So with HGNC, it builds on the HG instructions. It still gets the daily prices. But now it also gets those representative articles from the news clusters, plus the information about cluster size and how long the news trend lasted.
Okay.
The instructions then specifically tell the LLM to analyze how this news dissemination prime, the topic size, the duration, is likely impacting stock movement.
Ah, so it's directly prompting the model to think about the spread.
Yes.
Yeah.
It's essentially saying, consider not just what this news says, but also consider how much it's being talked about and for how long. How does that affect the stock?
So it's almost like whispering in the AI's ear, hey, pay attention. This particular story was everywhere for a whole week. That probably means something different for the stock price, maybe both now and down the road, than a story that just popped up once.
That's a great way to put it. You're guiding its focus. Now, the crucial question, the one everyone wants answered, does all this extra data, this clustering, these tailored instructions, does it actually work? Does it lead to better predictions?
And spoiler alert, it sounds like the answer is a pretty resounding yes based on that 8% figure. But let's break it down. How did they measure the success of FinGPT? What metrics did they look at?
They mainly use two key measures. First, binary accuracy.
Simple enough. Did it guess right up or down?
Exactly. How often did the model correctly predict the direction of stock price movement, up or down? The second measure was Rouge scores.
Rouge scores. Okay, what do those tell us?
Think of Rouge scores as a way to measure the quality of the explanation or the reasoning the language model provides for its prediction. How well does its summary align with what a good reference summary would look like? Does it make sense?
Got it. So accuracy for the prediction itself, Rouge for the quality of the reasoning behind it. What did the accuracy numbers show?
The results were quite striking. The baseline method, sort of the standard approach without the daily data or clustering, had an average accuracy around 55.0%.
Okay, a bit better than a coin flip.
Right. Then, when they added the high granularity daily stock data, the HG method, accuracy jumped to 59.2%.
Decent improvement.
But the biggest leap came when they added the news clustering on top of that, the HGNC method. That pushed the accuracy up to 63.0%.
And there's the 8% jump we mentioned at the start, going from 55% to 63%. I mean, correctly calling the direction of a stock almost 2/3 of the time, based just on news and price data, essentially.
Yeah.
That feels like a really significant step forward in this space, doesn't it?
It absolutely is. An 8-point improvement in directional accuracy is substantial in financial forecasting. And the researchers noticed something else interesting with just the HG method.
Oh yeah, what was that?
The language model actually started mentioning long-term and short-term impacts in its analysis much more frequently when it had the daily data.
Ah, so it was listening to the instructions.
It suggests it was, yes.
Okay.
The more detailed daily data, combined with those explicit instructions, seemed to genuinely guide the model to pay closer attention to how news plays out over different time frames.
So it wasn't just getting the direction right more often, it was also starting to think, or at least articulate its reasoning more along the lines it was asked to. What about those Rouge scores? Did FinGPT give better explanations to?
Yes, it seems so. Across the various Rouge metrics they used, the HGNC method, the one with both daily data and news clustering, consistently outperformed the other methods. It means that by including the news clustering, the LLM was seemingly better at capturing and explaining the complex interplay between news dissemination, market reaction, and stock movement. The higher ROSI scores suggest its reasoning was more coherent, more aligned with a good human explanation, implying a better grasp of why a stock might move.
That's really compelling. So it was more often right, and it gave better, more insightful reasons for its predictions, likely because it had that broader view of the news landscape. Did they zoom in on any specific companies, show how this worked in practice?
They did. They conducted a case study focusing on Boeing, ticker BA.
Big, complex company. Good test case.
Exactly. They directly compared the accuracy of the HG method, daily data only, versus the HGNC method, daily data plus news clustering, specifically for Boeing stock predictions.
And the results?
Consistent with the overall findings. The HGNC method achieved a higher accuracy for Boeing, around 63.2%, compared to the HG method's 52.63%.
Wow, that's actually an even bigger gap for Boeing specifically, over 10 percentage points difference there.
It is. A very noticeable difference for a major stock like Boeing. But they found something even more nuanced within the Boeing data.
What was that?
Well, it seems the quality or nature of the news clustering in any given week was related to how much better HGNC performed.
How so?
They looked at the percentage of news articles each week that fell into those really tight, high similarity clusters, the ones representing very consistent reporting on a specific topic.
Okay, the ratio of good clusters.
Essentially, yes. And they found a strong link. In weeks where the HGNC method significantly outperformed the basic HG method, this percentage of high cohesion news was usually quite high, often above 50%.
Interesting. So when the news flow around Boeing was very focused and consistently reported across many sources.
The HGNC method, which explicitly considers that dissemination and consistency via clustering, was much better at leveraging that information for more accurate predictions. It seemed to capture the signal from that unified news front more effectively.
Okay, that makes intuitive sense. When everyone's saying the same thing loud and clear, listening for that widespread message helps. What happened when the news was more scattered, when that percentage of consistent news was lower?
Well, they observed that when this ratio of high cohesion news dropped, say below 40%, there were times when HGNC didn't show as much of an advantage over HG, or sometimes even slightly underperformed.
Hmm. Any thoughts on why?
The researchers speculate that maybe when the news is more fragmented, less thematically consistent, the clustering approach might struggle a bit more. It might not capture the key market-moving signals as cleanly if there isn't a strong, unified narrative emerging from the clusters. They even included some charts and tables showing the weekly stats for Boeing news count, number of good clusters, that ratio illustrating how this dynamic changed over time.
That's a really fascinating subtlety. It suggests the benefit of analyzing news spread might actually depend on how focused and consistent that news spread is in the first place.
Exactly. It adds another layer to understanding how we might interpret and use news flow for market prediction. It's not just that it's spread, but how it's spread.
Okay, this has been incredibly insightful. So for our listener, the person tuning in who wants to quickly get a better handle on financial markets, on stock prediction, what's the core message, the key takeaway from this deep dive into FinGPT?
I think the main point is that FinGPT demonstrates a really tangible step forward for using LLMs in finance. It shows that by moving beyond just analyzing news content in isolation,
Right.
and instead incorporating factors like how widely that news is being reported, dissemination,
Hmm.
enriching the analysis with detailed daily market data context, and giving the LLM specific targeted instructions, you can significantly improve the accuracy of stock movement predictions.
And that 8% improvement really underscores the potential value here. It's not trivial.
Not at all. It highlights the power of more data-centric, context-aware approach compared to simpler methods.
And crucially, this isn't necessarily just about one specific model, FinGPT, right? The researchers seem to suggest the approach could be applied more broadly.
That's a really important point, yes. The underlying principles using high granularity data, employing news clustering to gauge dissemination, engineering specific prompts, these are techniques that could potentially enhance various existing LLMs or future financial forecasting tools. It's more about the methodology, how you feed and guide the model.
Makes sense. It's about smarter inputs and instructions.
Precisely.
Okay, so here's a final thought, something for you, our listener, to maybe chew on. As you're processing financial news, maybe start thinking beyond just, is this news good or bad? Consider this. How consistently and how widely is the news being reported about the companies you follow? Could tracking that spread, that clustering of information, offer a different kind of signal, maybe a more nuanced and potentially predictive one about where a stock might be heading? It definitely adds a new dimension to think about beyond just single headlines.